Okay, and first of all, so thank you very much for having me here นะครับ Thai Credit Bank, I think most of you maybe not really know about the Thai Credit Bank because Thai Credit Bank is actually one of the youngest bank in Thailand, and we are also still the smallest bank in Thailand. And our bank actually, if you are probably not our target segment because Thai Credit Bank is a niche, right? We focus more on the small SME, micro SME. So if you look at Thai Credit today, right, we have a total size of about 170 billion, right? And actually 90% of our customer, 80 to 90% of our customers are actually our small business owners. And we actually only about 17, 18 years old now, right? And we just went IPO in 2024. So now the bank has grown. So if you really look at maybe about 12 to 15 years ago, the size of the bank was only about 20 billion. Now we grow to 170 billion, right? So we were considered as one of the fastest growing bank in Thailand, right? But even though we have delivered this much growth and we focus on this small SME, we're still the smallest one, okay? So we just went IPO last year, and we are one of the unique bank in Thailand that we continue to focus into this micro small SME. Okay? So maybe that's why you don't really know much about our bank. But if you are in the Poka Meka or in the traditional segment or in the small SME, I think most of the people will know that, you know, who is Thai Credit Bank. Okay, so this is actually an interesting story which is it started many years ago when we were growing the bank. So it was originally we have a strategy that we said that, okay, because we are the youngest bank, so we tried to consider which segment was the best positioning for Thai Credit. And we look at, of course, the big bank, you know, they are very good in corporate, they're very good in consumer, they're also very good in SME. But we found a very big opportunity because we believe that the small SME, the micro SME, and at that time, if people look at the history, the Bank of Thailand has not issued a new policy on the nano and the micro loan. So most of the underserved segment or these micro and informal business owners is actually served by the non-bank. In general. So just to keep the story short, right, we believe that it was the right strategy for Thai Credit to go into this small segment. So we started by doing a very small testing on the loan program, try to open the first lending branch, right? So we try to expand and learn the market. So we understand that actually this market is very, very big. Right? The informal SME is very big in Thailand, and we see a lot of demand for borrowing. And at that time, because nobody is offering the product, which was considered because you know, the big bank actually they're all very good and they don't want to go into this segment because of the risk of this segment. So we tried to enter, and then over the last 10 years as we started, we start to see the pattern, we understand the behavior of the customer, and we start to grow and more slowly, and then we can manage the risk. And then the regulations from Bank of Thailand, which is the nano loan and the micro loan, actually enable us, right, to go even further into the Poka Meka segment, which is a very small merchants. So at that time we enter into the nano micro segment. We actually start to see that you know, the customers are actually very strong, very hardworking, right? And they borrow money because they don't have any access to formal institution. They actually borrow money from the loan shark. And loan shark maybe not all of them, a lot of them is actually also informal lenders. Like you borrow from your auntie, your neighbor, or the market owners, something like that, right? For them to survive on their business. And they are like a daily earners, right? So when we come in, we start to provide them with the proper, transparent, right? And we educate them on the loan and then try to build their discipline, right? So when we were doing that, we start to feel that, oh, this is the underserved segment and they are actually very good business people. You know, they have been actually doing business for generations sometimes. Their parents are shop owners, their children also become a shop owners, and they have history of 20, 30 years of running a shop, right? So we believe that, hey, these people are actually is a very important part of the economies, right? And then when we saw like there's a potential of 1 million target segment in there. It's a very big market. So we started to think that, okay, it is very important for these customers are forgotten, but they are actually important for us. So we actually studied this and then we built a new model, right, to serve this customer. So the bank actually understand that in order for us to serve this segment, we cannot work like a normal SME bank. So we created a micro SME models, right? So we built that. And when we build that, again, it's very interesting how we find that in order for us to be able to serve these small business owners, we need to create connections with them. We need to be part of the communities, right? We need to be know their names, you know. So we have to train our people and our staff to be understanding of the customers, like I mentioned before, you know. And after 1 or 2 years, they start to become part of the community. So all our branches, our staff, right? You know, and we actually also recruit people from the same location. And during that time when we studied this, we start building a culture. You know, the culture starts slowly forming in the company. So we hire thousands of people. We open 500 branches in only about 3 years. We build these branches, and then we hire like 1,000 or 2,000 people to work in the branches. As a relationship manager, as an account officers to work and serve the customers. So you think about it like this is like a big customer served with a private relationship manager, but actually they are very small business and we also hire people to serve them. So we treat them like a very important clients, right? So when we see this and then we create this, the culture start to form, right? And then we start to understand that, hey, actually, you know, the feeling that when we treat the customer to be very important, right? The customer actually say to us, they talk to us and say that, you know, we feel very comfortable to bank with Thai Credit. But actually you can walk into any other branches. And when you walk to any other banks, the other bank, they say they don't treat us the same, right? So the interesting part is that they don't treat the customer the same because they are small customers. But for Thai Credit, they are very important for us, right? Because they are our main customers. So that's why the word comes that everyone matters. So Thai Credit start to form and build this culture slowly over time because we try to take care of these customers. We create a marketing campaign about, I think, about 10 years ago. I think we created a campaign that, you know, other people don't see, but we see it, right? Because these people, the Poka Meka, the small business owners, look like everyone forgot about them, right? But we try to introduce ourselves and say that, can we help you and give you this financial access, you know, banking services for them. And as we start growing, right, then the culture becomes this everyone matters, right? So it's actually, it formed as a bonding between the customers, you know, with our employees and the bank strategy itself. So that's why we call, you know, the culture of everyone matters. So it's a bit long story because it takes about, you know, 10 to 15 years, you know, to build this history. And until today, we are all the employees, the management team, our shareholders, right, our board members, we are very proud with this culture of everyone matters. It's like that. So, but thank you for asking the questions. So obviously, I think when you see the interest margin is decreasing, right? It sounds like it's a sign of a difficult situation, right? So obviously, because the net interest margin of the bank will decrease when the interest rate comes down. But I think what people need to understand that from the banking point of view, we don't always see this as a bad thing. Okay, so the reduction in NIM is actually driven by many reasons. So the MPC rate from the government is dropping, which we believe that is also necessary to support the economy. And I think like we discussed just earlier, right? The reductions of the interest rate is actually helping the customers to reduce their burden, especially when the economy is not that strong, right? So when the economy is not that strong, reduce interest burden, then actually it's good for them so that they can expand further or survive on their business, and protect them basically over a longer period, this survival, so that they don't fall into delinquencies, they don't fall into bankruptcies, right? So bank actually see that as a very, very important thing. Have to remember that if the customer succeed, then the bank also succeed. If the customer fail, the bank also fail, right? So it is important sometimes that the interest rate drop, the NIM drop, in order for the customer to survive. So this is the way we see. And I think like one of the concerns that everyone has been facing now is the debt is too high, right? The debt has increased since the crisis starts, since the COVID start, since we have a slowdown in the economic, right? The household debt increase and also the small business debt increase, right? Because their ability to pay is lower, right? The ability to pay is lower because their income, like the revenue, their business also have less income, right? So that's where the issue is, right? So now it's like a deleveraging time for everyone to reduce their debt. And I think we have seen that improving in the last 1 or 2 years, which is quite it's quite promising to see that. So from the bank point of view, if we look at the financials, so NIM may drop, but if you look at Thai credit performance, our portfolio quality also improved actually quite significantly. Compared to last year to this year, it's actually quite significantly. So the credit cost, which is basically the cost of risk, right? The risk cost, right? Reduce also quite improved because of the portfolio quality. And so if you look at that, our profitability actually, comparing the first half of last year to the first half of 2025, we actually grow by more than 40%, right? So the net interest margin may be dropping, but our profitability improved, right? Because we have growth, number one, and we have improvement in portfolio quality. So so it's like that. So again, I think the bank is not seeing this as a bad thing, right? And we also expect that this will be a temporary situation, right? Because, we see a slowdown, we see a lot of reduction in interest rate that we have to help the customer who have difficulties, like restructuring program, reducing their payment, which will impact into the interest rates, right? That should be a temporary. That should be like, maybe, but this temporary really depends on the recovery of the economics, right? When the economy recovers, then a lot of the customers who are under restructuring, they can recover their business and therefore their payment will go back to normal, right? And we are expecting this maybe, in the next 2 or 3 years, right? We hope that the economy can recover. So then when the market recover, the economic recover, the NIM also will adjust up again. I think that's like that ครับ So as I mentioned before นะครับ actually in the last 10 years if you look at the last 10 years Thai credit grow I think about 8 times it's about 800% growth right so this year 2025 actually we already slowed down the growth because the risk is higher right but having said that right we're still growing I think about 12 to 15% year on year about 12 to 15% year on year so we're still seeing a strong growth and if you look at the loan that we are booking today 70% is actually new customers okay new customers almost the same like before but it's just that the loan size is smaller because we believe that the needs of the loan is smaller right but the number of customers who wants to borrow the loan is the same right and why is that because Thai credit is operating in the micro SME right in the bottom of the pyramids right which is actually there are more customers who still demand a loan because they are still in our opinion they are still underserved okay there are not that many players who focus on this micro SME these small informal businesses so that's why we still see big opportunity going forward right but when time is difficult like I said the economic situation is one of the most important part now we believe that not many of the small businesses are also expanding their businesses they are not investing too much because of the situations right so we see that is a slowdown right so that's why we have to control on the risk of this right so we're still growing anyway because of number one the number of customers is still a lot demand is still very high right but the market situation is not very strong right so that's why you see that our number is still growing but not as much as before now let me just close this door right in the last I think 1 or 2 years I mean the last 1 year the banking industry in Thailand is the first time it start to contracting right it's negative growth okay so it's like that so Thai credit is actually it's different from the industry today right we're still growing we're still expanding right we're not cutting OPEX also we're still investing in in our operation in our digital banking platform continue to do that so we are just close this answer that we are still a growth company so we are actually very proud of this performance last year Thai credit see increase in NPL and delinquencies right so we understand and we feel that there is a sign that the recovery was very slow because actually last year 2024 when we were creating a business plan for 2024 in 2023 we are actually expecting recoveries right so if you look at all the economists were saying in 2023 they're actually saying that there's a big recovery in 2024 a lot of promises okay so we see that and then what happened is that actually it's not really recovery in fact it's weakness there was a lot of weakness in 2024 okay so then many of the customers also I believe right the small businesses make a mistake themselves by expanding and then not getting the revenue not getting the business so they start to fail okay so we saw that in 2024 okay in 25 we expect that the economy also will be very stagnant not growing that much not many stimulus is happening right but right in 2025 this year what we are seeing is completely different because the customers are so resilient are so much better than 2024 right so the first half of the year we are almost like 70-80 basis point better in terms of credit costs the NPL that we are seeing also so much better compared to the first half of last year that's why our portfolio quality is improving right now if you look at what is the situation today for example what is the biggest market impact right? Economic impact of 2025. For example, slowdown in real estate, slowdown in auto sales, and then after that we have the tariff war, which is export import got impacted. So you look at our market, the micro SME segment, maybe less than 2 or 3% of our portfolio have any exposure on export import. Our customers are all domestic play. They serve the local community, right? They serve the local market, and they may be part of the supply chain of the bigger SMEs. So our customer group is more like indirectly affected by all this slowdown in home sales, right? Slowdown in auto, slowdown in the export import, right? So that's why I can see that this micro SME in our group that we are watching are very resilient. Very resilient. We have done some research to check also how many of our customers changed their business or closed down the business. The number is very, very small. It's very, very small. So we have been, I think, very happy with that results. So the outlook, I think that we can still see that there is still some strength, resiliency on this micro SME segment. But we do hope that the economy has to get better, right? If they don't get better, then of course there will be some impact, right, to the micro SME as well. Okay, so capital allocation, actually we are quite well capitalized, right? I think our capital about 17 to 18%, which is far above the requirement of the regulators. So, but the capital is important for Thai Credit more so than other companies, for example, because we are a growing company. Okay, we are a high growth company. When you have high growth, you need high capital. Okay, but you have to see also, which I have to mention that Thai Credit have a very unique performance compared to all the other banks, right? Because historically, our ROE is as high as 20%. Okay, it's as high as 20%. This year, the first half, we have about, I think, 15 to 16%. That's one of the highest among all the banking industries. Even I think globally, by standard, this is one of the high ROEs bank. So the ROEs help us, right, grow the capital. So when we grow the capital by 15%, so right, it actually gives us the funding access to grow further. So this is a very unique one. So we are growing maybe 10 to 15% or more, right? But our profitability also give us capital 10 to 15% or more than 15%, right? So actually we are able to recycle all this profitability and funding our growth, which is part of our strategy. It is important for the bank to sustain the growth, to sustain the performance, to support the customers and continue to grow. Okay, so that is one of the key strategy of the bank, is to balance our growth and the financial performance. Yeah, that's a very good question also, Nakam. So I think throughout my career, throughout my professional career, so we understand that the making sure that our shareholders happy is very important. So let's look at Thai Credit. So Thai Credit history until this year, so we always reinvest all the profitability that we have into the bank. Because if you imagine, right, we have like 800% growth. So we won't be able to pay dividend. So we have to reinvest all the profit that we make. But actually our shareholders are very happy with that. Okay, because you see that, hey, the value is multiple, it's a multiple increase. It's not like a percentage increase, but it's a multiple increase, right? But last year we start paying dividend, and which is obviously, of course, is good for the investor to receive the dividend back, and it's still also good enough for us to continue to grow. That's why if you look at our ROE, which is more than 15%, right, and historically it's always been around 20%, it's actually enough for us to build the capital to fund the growth, right? And at the same time, we can also spare some and then pay dividends. So you see this improvement that before we've been reinvesting, now we continue to reinvest and pay dividend. Okay, so the outlook going forward, we would like to continue to protect this so that we can continue to pay dividends, right? And also have enough to fund for the growth. Because like I mentioned before, right, Thai Credit is a growth company. Okay, so that's to answer your questions. And I think I would agree to that statement as well, right? Investing in the Thai banks, because if you look at the history over, 20, 30, 50 years, right? With the exception maybe 1997 crisis, right? So the banking has been strong, right? It has been consistently delivering good performance, and profitability. And if you see the dividend, it's actually quite consistent. Some of the bank I remember, I think pay like more than 5%, some even 10%, right? So obviously during the downturn, during the slow economic, and when the stock market price continue to drop down, which is then the value of your investment may be lower, then dividend is a very welcoming news, right? So you actually receive good dividend, and the banks are, one of the industries that pays good dividend. So I agree that I think if during the difficult time like this, which industry that you believe will survive and last longer and give you reasonable return, then maybe banking industry is one. Okay, especially you get this dividend return. So Thai Credit Bank actually focus on the micro SME, right? So this is basically, in a simple term, in the general term, it's a small business owners, right? When we are lending money, we lend money for the business to grow, right, or to make more income, right? So this is different from retail segment where we let them use the money for spending. We use the money for emergency purpose, for example, right? So we don't really do that, right? We have a small portfolio on the consumer, but that's also targeted to like the home for cash, right? So this is basically to give a low interest for emergency needs. So when you need to borrow money, instead of you borrow from personal loan or from your credit card, which is very expensive, you can use your home equity, right, to take some cash out. So these are the big portfolio of our business today. About 90% of them, right, is really for this purpose, right? So we're not really expanding on retail yet, not yet, right? We still see that the market in the micro SME is still very big anyway, so we would like to continue to focus on this, at least this year, at least, like that. Oh, okay. That's also a good point. Well, my suggestion or recommendations, I think, well, I personally, I guess I would not consider myself as a advisor of your investment, okay? But what I'm seeing in the market today, I think it's very risky market today. You really need to look at investment product that has an underlying of resiliency, have underlying of sustainability. Strength is more important. Safety is more important. I believe that at this stage, right, it's not really a good time for any investor to start taking risks, right, or making a big investment and trying to capture something with all this volatility. I wouldn't recommend that, right? But also, at the same time, when you see this downturn, as what you have seen in the past, there are many downturns in the past, right? And then you will know that the wheel will turn. Okay, it will come back up again, right? When does it come back? Well, if there is anybody who can predict that, they will be very rich already, right? So what you could do is that when it's down, you're just slowly collecting the undervalued stock. Start looking into which one is undervalued. Like I said, undervalued, resilient, but the price is depressed because of the sentiment of the market, and then you believe that in the long term, they will come back up. Right? But if you try to make money short term, maybe not a good idea. That's too risky, like I said, on the volatility. So try to look at undervalued, and I also personally believe that the market have to return. The market have to recover because everyone, you and me, all of us, all my customers, we all try to recover, right? So nobody is just going to close the business, like I said, We look at our customer, everyone is trying. Everyone is trying. So I believe that the market will recover.